Hello and welcome to the very first update for 2024 for Genesis Vault Capital. We have a lot to cover in this update today. So today we're going to be looking at where is the market right now, what is the state of the market, the ETF launch and what's happening with the ETF, with the Bitcoin ETF that launched. We're going to review last year. And then what is our theme for investing moving forward? We have 6 different themes that we are looking at, evaluating various startups. So I want to share that. And then we're going to quickly go over operations update, the venture capital studio update, the venture studio update, and wrap it up at the end. So with that, let's get started. In 2024, right, Bitcoin ETF approved. It's a big news for what happened in January. I think that 2024 is going to be a great year for crypto. We have regulatory clarity, market adoption is continuing with the ETFs and other on-ramps that we will talk about. So a lot of fiat money just sitting on the sidelines, they're all expected to come into the crypto market. And I think this year we're going to do extremely well. And this is my 12th year in crypto. Cannot believe it. I bought my first Bitcoin back in 2012, 2024. I'm like, wow, 12 years, how did it go by? Witnessed through multiple cycles of people coming in and leaving, projects coming in and leaving, projects that we thought would do well, not doing so well, and projects that we thought were dog shit, doing really well with all these meme coins, new perspectives, themes that are coming in and out. And with that background, I still believe that 2024 is going to be a phenomenal year because of Halvening and a lot of other developments that are coming in. So without further ado, let's look at where is the market right now. What's the current state of the market? The big news, as we know, is around the crypto, the ETFs that are coming in. I'm going to make my video a little bit smaller. The 11 Bitcoin ETFs were all approved on the same day. It's a major milestone in terms of providing access to cryptocurrencies for regular folks. The spot Bitcoin ETF is that what is launched. We already had a future Bitcoin ETF, whereas a spot Bitcoin ETF allows people to be able to hold Bitcoin directly. And the approval has been a long journey. It follows a court ruling against, and after multiple ETF proposals, finally we have this ETF that has launched. And it's going to attract, why this is exciting, it's going to attract a broad group of investors, providing easier access to crypto management even after all the years of progress that we have had. What has it been, 14 years since Bitcoin originally launched? It's still not easy for people to hold Bitcoin for a normal everyday person. And we saw the spot Bitcoin trading volume, cumulative volume surpassed over 50 billion. It's like 53 billion now. And the Bitcoin ETFs is among the top 1% of all ETFs. That's pretty big news because it includes all the other ETFs like gold, and you also have so many other ETFs compared to all the other ETFs. This Bitcoin ETF is on the top 1% of trading volume. And right now we have roughly about 300,000, it's like 293,000 something ETFs that are held by Bitcoins that are held by BTFs. So in comparison, if you look at the amount of Bitcoin that is going to be mined in the next halvening period, right? The halvening is going to come in April, and from 2024 to 2028, the amount of Bitcoin that is going to be mined is 657,000. And already within the last like 30, 40 days, we have 300,000 of Bitcoin that is held by ETFs. So we saw the demand spike that was coming in with the launch of ETFs, and the price of Bitcoin went from roughly about 35,000 to all the way it's now trading about 50,000 or so. Next, we are going to see a supply crunch, a huge supply crunch that is coming. That's going to happen in April. And you put both of them together, I think that we're going to see a huge increase in price of Bitcoin. If we compare it to the launch of gold ETF, when gold launched, ETF launched in 2004, the market cap of gold was roughly about $1 trillion. It went from $1 trillion to almost 16 trillion in roughly 7 years. And Bitcoin adoption, I believe, is going to be much more faster, meaning that we don't have to do it in 7 years. And it's going to be much bigger than that in a short period of time. So, that's another reason why we think it's a big deal, because the ETF allows for money flow into the crypto market, easier access to money flow. It allows portfolio diversification of institutional investors, similar to what happened with gold, right? If you're an institutional investor, you want to diversify with gold. What are you going to do? Go buy gold and bury it in the backyard? Like, no, it doesn't work for institutional investors. So if people want to diversify, they can just go buy the Bitcoin ETF. Depending upon who you look at, Standard Chartered Bank estimates maybe 50 to 100 billion of new money inflow this year. BlackRock saying about 100 billion. And what it means is if you get $100 billion of money coming into Bitcoin this year, we probably would see a 5x increase in price. Like, no, that's the rough math that we are seeing right now. So Bitcoin is right now trading about 50,000. So if 100 billion of money comes in, we probably would see Bitcoin trading maybe 100,000. Like, no, I think it's probably going to be, I wouldn't be surprised if it hits 200 or 250,000. It sounds really insane from where it is right now, but that is how these exponential assets work. And in addition to that, we have a lot of usability and wallet innovation. This is outside of the ETFs. There are these new wallets. They're called smart contract wallets. This is under Ethereum. And it basically allows people to solve the number one issue with wallet management, right? Which is, what do you do if you forget your seed phrase, if you forget your password? You don't have access to all your assets. And there is these smart contract wallets that allows for social recovery. You can give it to people who are in your trusted network or to a law firm so that like they can help recover your password in case something goes wrong. Helps improve transaction efficiency. Programmable wallets, Circle has integrated. They have like programmable wallet where you can do a lot of various activities, including forgetting password, being able to pay rent on a monthly basis. Fireblocks has a multi-party computation MPC, which it's much more secure, and they're integrating with Flipkart, which is Amazon of India. So you have a lot of those innovations that are coming in. How are we planning to invest in Genesis for this year, right? So we have three key strategies for investing this year. One is we're going to continue to do our fundamental thesis-driven investing. That has proven. We are going to go back to things that has worked for us in the past. Farming, we'll talk more about how we are planning on doing some farming, and also how do we mitigate risk through proper risk management strategies. So first, thesis-driven investing, talked about the great methodology, having a thesis for being able to invest and evaluate these projects. So spend a lot of time forming a clear, concise investment hypothesis based on what's happening, based on a lot of research. And after we look at the fund performance, we're going to look at 6 different themes or theses that we are looking at for investing this year. Thesis-driven investing is different from momentum investing, because momentum investing, you're purely looking at price action and movement of price or technical investing. Thesis-driven investing prioritizes deep fundamental analysis for having a conviction around how the market is going to evolve. It's got some advantages, right? It brings clarity and focus around what is our core belief and how are we making investments around our core belief. Also has to have a focus on long-term perspective. These markets are very thinly traded markets, so the price action varies tremendously and can give us some clear risk management when we do thesis-driven investing. The process that we do, it requires a lot of research. We cycle between the 3 steps. One is to analyze the trend to formulate a thesis. And we look at 6 different trends, everything from AI and other trends that we are looking at it. And that is everyone in the market can look at. Looking at the trend, then we have to go in and look at, hey, what is our unique theme? What is our unique perspective? How are we taking advantage of the market? What is something that we are seeing in the market that others are not seeing? And that's where you can get these 10, 20x returns, that unique insight that takes a while. And then once we have that, then we analyze the project. So we use the great methodology to be able to analyze the project. And this is very circular, because the more projects we analyze, it gives us an idea of the trend. And looking at the trend also helps to formulate a unique insight. So that's the first strategy that we're going to do. Second is around farming. And farming, there are 2 kinds. One is airdrop farming and staking and yield farming. So airdrop farming is essentially looking at where people are doing airdrops. For example, Bored Ape, they did an airdrop for people who are holding the Bored Ape NFTs. Now, we don't hold NFTs in the fund. NFTs, it's like completely different way of being able to evaluate it. And there are people who made like $50 million from these airdrops of the various tokens. And so what is an airdrop and how do we take advantage of it? Think of airdrop as an incentive to promote a particular blockchain or promote a particular startup. It's almost like a marketing expense. You give people some coupons in the hopes of them coming and buying products at your store. When people come to product at your store, they end up buying other things. So that's the whole idea behind airdrop. To increase awareness, you can have the various airdrops that are tied into the token economics of the project. And in some ways, it ensures fairer distribution of various tokens. So the way it typically works is that some small tasks like liking a tweet or commenting. You have to stake some tokens to get some airdrops. If you had participated with other projects, you can get some airdrop. If you vote on governance proposals, you can get it. So the airdrops allows a way for distributing these tokens. And for example, they can say, okay, every address that has a balance of more than 0.01 Ethereum will receive an airdrop. And typically, they don't announce the airdrop until they do a snapshot, and the snapshot date is kept as a secret. And the rules are different or unique for each airdrop. So that is airdrop. We're looking into farming that, and staking and yield farming. This is another way where specifically for decentralized projects where users can lock up or they can stake their crypto assets to earn various rewards. And the way why it matters is that you provide liquidity and you're being able to earn some yield and reward. So we're going to take some high quality projects that we have, like things like Ethereum that we are holding, and we're going to stake those assets and be able to generate an yield. So those are the two farming methodologies that we're going to be using this year. And the third strategy is around risk management. This is really crucial because crypto is a market of raw emotion. If you look at it, you have the price of Bitcoin, and then you have like the fear and greed index overlaid on top of it. In the last cycle, we never went to extreme greed, right? So we hit about 60,000 or so, and then we kind of dropped after that. So being able to look at the emotions of the market and be able to do some asset allocation and some principles that we have learned over the last year, right? Being humble when things are going right and forgiveness and compassion when they are going wrong. Last year was really challenging to navigate the market, and somehow we survived. And less ego equals more wealth. That's one of the things that I learned from last year. And also want to manage money in a way that helps me sleep at night. Being okay when things are going wrong. And in crypto, we can be wrong more than half the time and still make a pretty big fortune. And another thing for me this year is to increase time horizon. And one of the most powerful things that we can do as an investor is to increase your time horizon. That has a magical effect of smoothing out some small mistakes and allowing risk assets like crypto to be able to pay off huge over a period of time. So we have 6 main themes for the year that we are looking at in terms of how we are going about making some investments. The first theme is Wall Street adoption of crypto and how we are going to play that. We already had the Bitcoin ETF. AI and crypto, I think it's a huge theme. AI is a huge theme even outside of crypto for the year. And we're going to look at how AI and crypto intersect and where they meet. GameFi, how GameFi is leading to blockchain adoption and how we are playing in that space. DeepIn, decentralized physical infrastructure network. We're going to look at what is DeepIn and why it's interesting. Next is global regulations. We have so many regulations that are coming in, which is ultimately going to be beneficial. And the last theme is real world assets. Now let's look at each one of them in detail. First is Wall Street adoption of crypto. Bitcoin ETF launched, great, it lays the foundation for other crypto ETFs. We're going to have Ethereum ETF that is next in line, probably by summer, maybe by fall. We're going to have an Ethereum ETF. And once we have that, like we're going to have other layer 1 and layer 2s. And eventually, I think we're also going to see meme coin ETFs. I don't support investing in it, but like that is the nature of what is happening. And if you compare Bitcoin to internet adoption, right, you overlay Bitcoin, the number of people who are adopting internet with the number of people who are adopting crypto, it almost follows a similar line, right? So I think that is a really huge opportunity that crypto adoption is going to continue to grow. And similarly, if you look at the internet adoption versus Bitcoin price, that also has a similar overlay. And we talked about the stock to flow model in the past. All of those point to the Bitcoin price getting to 6 figures this year. Second is AI and crypto. And AI and crypto both need to have a lot of underlying hardware to enable the infrastructure. And immediate use cases are decentralized GPU markets. We are seeing a lot of demand for GPUs and not enough supply available. So that is another area that we are playing at. 3 main themes that we are looking into in terms of investing. One is to address existing problems. We talked about GPU shortage. And there are a lot of deep fakes that are happening. The White House released a report saying that deep fakes is one of the big challenges that we need to address. And cryptographic signatures can help address that. So that's one area. Second is how can AI accelerate the using crypto? How can we accelerate AI progress using crypto? Where crypto is really helpful is to be able to incentivize collaboration. So tokens can be used as an incentive mechanism to help a global workforce collaborate. And we have one of the big advancements with OpenAI was reinforcement learning with human feedback, RLHF. And these crypto tokens can also be used as an incentive mechanism for being able to collect the data. Next area that we are looking at is being able to bridge on-chain with AI. So you can have like intelligent smart contracts that can use smart contracts that has built-in AI embedding in it, and AI agents being able to tap into crypto for being able to do various payment activities so that it can be completely automated end to end. So that's the second theme that we are looking at, how AI and crypto interlace and overlap. Third one is in the gaming space, how gaming, we believe, can lead to mass blockchain adoption. GameFi is a combination of gaming and finance, where you have various games or Web3 games overlay with decentralized finance. So users can earn rewards and assets through various blockchain games. You have different NFTs and crypto rewards that can happen. So that's what GameFi is, all of that umbrella. And GameFi is really interesting because it provides true ownership for players to own in-game assets. They have play-to-earn mechanisms where people can earn by playing. Interoperability, you can have a particular character that you have developed in one game, being able to use it in other areas, and brings a certain amount of transparency and can bring in the community of people to help with the decentralized governance. So we believe that to bring blockchain to a mass market, to the next billion people, gaming is the way to do it. And when investing in gaming side of it, right, there is like various risk-reward spectrum. Gaming assets have the highest reward, but also the highest risk, because if we invest in the right gaming assets, it's going to have huge impact, but there is also a very high likelihood of being able to lose money. Games are the next way in which we can also be able to invest. Or game studios or game platforms. We are mainly focusing on game platforms because in some way, regardless of which game is successful, the game platforms are going to be successful. The fourth one, is DeepIn, Decentralized Physical Infrastructure Network. So what is DeepIn, right? So DeepIn, it is a way in which you can use physical infrastructure for various activities, right? So you can use it for decentralized storage. You can use various networks for, we talked about storage, where in which you can have hard disk space being provided, and location sharing. It's a way in which you can have real world physical network. And Deepin is also interesting because you have a focus of privacy with all the data that is being shared. Similar to sharing economy, how information was shared, like Airbnb unlocked people's homes. You similarly, Deepin can have the potential to unlock various physical infrastructure. There are different people who are already playing in that space. We talked about storage, like Filecoin, Sia, etc., are doing in the storage side of it. Compute network, Akash and Render, they're all doing compute side of things. In terms of machine learning, you have BitTensor and ChainML. They are doing some stuff. So there is wireless networks like 5G with Helium. There is geospatial networks like people like HiveMapper, or being able to monitor environmental stuff like WeatherXM and Silencio. So those are all various aspects of Deepin, and we are looking into that as one of the theme. We mentioned about Helium Mobile. They partnered with T-Mobile recently to be able to share their IoT network. And it's a hybrid model wherein which you have people owned network and also company owned network, and being able to have an opportunity for crypto earning. Now, the fifth theme is global regulation, and this is an area where I think we're going to have a lot more regulatory clarity this year. We had talked about FIT21, which is the Financial Innovation for 21st Century. HR 4763 is the bill that is passed, and it's proceeding to the House floor. And this is a collaboration between the Financial Services and the Agricultural Committee to have clear regulations, right, rather than the framework being contested in court with SEC and CFTC. It's ground up way for being able to have specific regulations, and it's gotten industry support by Chamber of Digital Commerce, and it also has some deterrence. Whether this bill passes or not sure. I think it's most likely going to pass, and at the same time, this is very comprehensive, well-written bill. We also have globally, there is MiCA and TFR in Europe. That is also happening. It brings more regulatory clarity in Europe. There are still some challenges around DeFi regulations, what's happening with DeFi, how to do taxes, and what is the governmental stance on it. We still need more clarity around it. But the overall trend is we are seeing more and more clarity, more and more governments coming up with the policies for crypto. The last theme is real world assets, or RWA. And real world assets are physical or tangible assets that are made digital. And there is a demand from investors for on-chain assets. So this is coming from investors' perspective, not Wall Street, like Robinhood, like popularized stocks among the younger generation. And you have interest in crypto and other platforms. So similarly, a lot of these DeFi natives are looking for ways of generating yield by bringing in real world assets into the blockchain. So we are seeing that the real world assets have a way for being digitized. And this is our $250 thesis, that cryptocurrency as a whole will be a $250 asset class, like 1,000 trillion. Right now, it's roughly about 2 trillion. Bitcoin is $1 trillion, right? And all the other assets are about $1 trillion. So the way that we think is going to happen is through tokenization of like real estate, tokenization of bonds. And we are beginning to see that happen, is that it's going to start with stable coins first. And real world assets also are not as volatile as crypto. So it's going to bring in some amount of stability and attract new class of investors that have not been in crypto before. Having said that, if you have any questions, always available. Once again, thank you so much for your faith and trust in believing in me, believing in Genesis to invest. And this year is going to be phenomenal in terms of the market opportunity. And the plan is to be focused on making some investments that's going to produce some good returns, maybe massive returns for us. Thank you.